Hello and welcome to the Weekend Investing Daily Bite of 4th of November, the first day after Diwali, and the markets were slammed. A pataka was burst today, and markets were down nearly 500 points at one point of time, but recovered back to nearly 300 points. The proverbial HNS head and shoulders pattern was breaking down today, and nervousness around the US elections is at its peak. But more worrying factor for the market is the zero profit growth for most NSE companies, Nifty companies. We'll talk about this in the second half. Please read the disclaimer and subscribe to the channel if you haven't so far. Please also click on the bell notification to make some noise. Where's the market headed? So markets tantalizingly near that breakdown point, somewhat recovering, almost reached back 24,000 after hitting 23,816. Still tentative. I still feel that it is extremely oversold. Not much of downside immediately is possible. I think needs to consolidate at some point of time. Maybe around 23, 300, 400 is a great place to sort of rest for some time. Or maybe today and tomorrow, the 2 days before the US elections, is going to be the maximum sort of pain, depending upon what kind of outcome is there and what is the world view of the new formation. Chinese markets are also a bit nervous. Indian USD INR also was hitting new lows today, although there was no major damage there. So Nifty minus 1.27% down, largely on back of large cap selling, likely by FIIs. Mid caps sort of, or sorry, Nifty Next 50 sort of within the last 5 6 days range. So damage, yes, of 1.4%, but no net damage versus previous sessions. If you compare it to Nifty, Nifty went into uncharted territory since October top today, whereas Nifty Next 50 was still playing around in the previous range. In terms of the mid caps, again, you can see mid caps is still where it has been since June, so no net loss so far, minus 1.2% for the day. Small caps had a good rally in the last 5 sessions, and only some of it has been given back at 1.8% down. So small caps actually looking the best amongst all indices so far. Bank Nifty also within the last 4 5 days range, minus 0.89% down, neither here nor there, just bobbing around this 50,000 to 52,000 mark. Momentum trends advances at 143 stocks, declines at 355. So certainly the declines were the influence of the day. Uh, we really don't know how much FI selling happened today, but yesterday's the Murat sessions figures were small. Both DIs and FIs sold on that day. So, this brings me to the point that a lot of people buy on Murat session for the, token sake that let's buy some stocks on Murat session, but smart investors always are selling on Murat session. And the sort of a common refrain that I've heard is that if you want to bring Lakshmi into your house, you sell something and the money comes back. So you don't want to have Lakshmi go out of your house on Murat session. So you can let me know your thoughts on this. I thought it was quite a new thought process, where buying something on that day was not being seen as auspicious, but selling something was being seen as auspicious. Anyhow, so the FII continues to sell. Domestic institutions hopefully bought today. We will come to know of the figure later, but the trend of the FIIs are certainly the same. No much place to hide today. Reliance, HDFC Bank, TCS, ITC, L&T, Bharti Airtel, all down big way. State Bank of India bucked the trend. Mahindra and Mahindra was up. Tech Mahindra was up. Cipla was up. And not many other stocks were up in the Nifty. Reliance, there were some rumors of Geo IPO next year that caused Reliance to recover some of the lost ground. I think at one point of time it was nearly 4% down. Coal India, ONGC also down quite nicely. In the Nifty Next 50 space, you see PNB moving up, Bajaj holding up 3%, Motherson 1.5% up. You also had, what stock was this? 3.4% up, I'll find out. Indigo, IOC, TVS Motor, BBL, Vedanta, Tata Power, all big losses. DLF, which has been making waves of news regarding their new project where they have 70% margin, 27,000 crores of top line expectation. Even that was smashed today, minus 4%. In the sectoral trends, you had Nifty Bank losing nearly a percent, Nifty Autos losing nearly a percent. The max loss was nearly in media and metals, and also I think energy stocks lost quite a bit. I think energy is not in this list, but uh, these are some of the key sectors that lost ground. You can see healthcare, PSU banks, and even pharma not really falling as much as the market and bucking the trend. In the uh, uh, data that we have the Morot session and today's session combined because of our data provider. So, it will look a bit different from just today, but in both sessions together, PSU banks have really shown out. And for the month, PSU banks are now positive, and IT stocks are minus 4.2% for the week gone by. So this is something that last month or two has been really bad, or 2 months actually, 2 to 3 months has been really bad for PSU banks, but that is coming back up very, very nicely. And you also have public sector enterprise stocks and energy stocks that have really slumped in the last 3 months. In the real estate space, you had some losses. Brigade, DLF, Mahindra Life Spaces, Phoenix, Prestige, Godrej, all losing ground. The index itself is not going anywhere. It is just sort of bobbing around that part, 2.93% on that. First Source was a great uh, uh, gainer today, up 5.8% on a day like this. If stocks are gaining, they tell you that there is inherent strength in those stocks. So look out for First Source. This has been on a tier since 5 rupees, and now it is trading at 359 rupees in just a decade. So this is a stock to be looked out for. So zero profit growth scare for the market. Why are we saying this? So the idea of this is essentially that the results so far is showing that a lot of Nifty companies are not having any growth at all. That is causing jitters in the market, and of course, the can the bulls hold on to 24,000? So the market men, in their own wisdom, started the fall much ahead of the results, as usually the BBC principle uh, is applied. And once the results are out and they are possibly even worse than the worst expectations, then of course more selling comes through, and the expectations come really bad. The potential reasons for the current volatility, of course, is the Fed meeting outcome on 7th November, which is keenly awaited. US elections on 5th November, likely to be announced. They have a very complicated system. If some key states are very close, then it may take more time for announcement. Oil prices are rising again, and of course, disappointing earnings, as been mentioning. So this is the number that I was talking about. 34 Nifty companies have shown flat year-on-year growth, and major earnings downgrades are hitting now FY25 and FY26 projections. So everybody is adjusting accordingly, and maybe selling off basis this thesis. Now, whether this will be right or wrong, or whether the market will go up or down, is anybody's guess. But right now, the liquidity is moving out, and that's what uh, the prices also are showing. BPCL, Reliance, and Coal India led the plunge. Mixed performance is coming across banks, IT, consumer, and all marketing sectors. Nifty FY25 EPS is slashed by a percent or more, and FY6 is also getting slashed. So whenever you have downgrades, uh, some consolidation or going down in the market is kind of obvious. That most people follow earnings. I mean, as momentum investors, we don't do any earnings follow, but 98% of the market follows earnings basically, and they are probably going to be nervous post all these slashing of earnings, and people are selling left, right, and center, not knowing what to do, because they typically never have a plan of how to execute in the market. And just uh, there is immense amount of fear amongst a lot of investors. So, given the fact that we are following prices and we are following trends, some of our strategies have gone to some cash, some are rotating into some defensives. It will take care of itself, not worried at all. Out of the 34 companies that have come out, top contributors have been ICICI Bank, Axis Bank, Bharti Airtel, NTPC, and HDFC Bank. So you can see private banks are the top contributors so far, and adverse contributors have been BPCL, JSW, Coal India, IndusInd Bank, Reliance, and Ultrasamco. These are big companies in the Nifty, large uh, allocations and large contributors. So if that is the kind of results that will come, it is obvious that significant amount of people are going to be panicking. So 9 companies out of 34 have reported below expectations. 10 companies have reported results which have beat expectations. 15 companies are in line uh, with the results. 7% EPS revision of Nifty has happened in the last 6 months, and 5% uh, expected FY25 earnings growth. And this, they say, is the weakest since FY20. So, what is going to happen? Maybe this is nearing a bottom. It may so happen that we are nearing a bottom, and this shrill of bear market, and India has lost the plan, and so on and so forth, is happening. Maybe this is some kind of bottom that is happening. We will not know until much later, or maybe there is more to go. Uh, it will all depend upon how global flows happen, how Indian flows, Indian SIPs, domestic flows will happen. You really can't make out whether one price earnings or EPS is good enough to sustain the market right now, or 20% lower or 10% higher. So that kind of conundrum will always remain. The best way, according to us, of course, remains that you follow trends and you follow the strategies. What am I doing? I do monthly SIPs, and I do some larger invest more type of big shorts into my portfolio on days when market is really, like today. I made an investment this morning, and I'm not really worried about market direction at all. I know over a period of time, the strategy that I am following, which is also a momentum strategy, will take care of itself, just like all other strategies will take care of themselves. And you really don't need to worry about the markets on a day-to-day basis, but use some opportunities to deploy capital. So the question to ask is, what is your thought process? Have you exited the market? Are you making partial exits? Are you making any additions? Are you worried? Are you not worried? Are you there are two, three different things that can happen in your mind. One can be that you are really fearful and you exit and you run away. Another could be that you are feeling the pain, but you're saying, I'll hold on. Let me add a bit more or something. Another one could be, I really don't care. I really don't bother because I know the long term is good. I'm following a good strategy. I'm making periodic investments. And this is a noise that I have to bear to make sure that I make that alpha above what the bank gives me. So you are taking some risk, and hence you're getting more returns. So don't get jittery because of the volatility, because you signed up for that when you came to the market. So that's the sort of underlying theme of the market. Don't be afraid. Don't be scared. When you take a sort of a what do you call, a, let's say, a bungee jump, you know that you're going to be scared a bit, but you know that after a couple of shakeups, you will be fine. So that's where the market is, and hope you enjoy the journey and make fruitful gain out of it. Thank you so much. Please share these videos if you like them, and I'll see you in the next one. Thanks. Bye.